Good afternoon, everyone, and welcome to this edition of TBD Micro, your Colorado Springs real estate podcast. I'm Rob Thompson, associate broker with the agency at Colorado Springs. I almost said here at the agency, but I'm actually on location with my friend Troy.
Hey. Hello, how are you today?
Good. Good. So who are you, Troy, and where do you work, and what are we doing here today?
Absolutely. Again, first of all, Rob, I really want to say thank you for allowing me to do this. This is a great opportunity to educate people out there, and that's exactly what I like to do. I'm Troy Reichert with the Reichert Mortgage Team at Integrity First Financial out here in Falcon. We are located in the Safeway Shopping Center. Just look for the home loan sign and you'll find us. And I am a father of three, and I got three teenagers, so I got a lot going on for sure. I am a retired Air Force veteran of 20 years. And after that, I decided to jump in and have enjoyed the mortgage profession for over 5 years now. So,
what did you do in the Air Force, Troy?
Well, I did a little bit of everything. My first tour, I was down in Florida working on aircraft, C-130s. I worked on all the instrumentation, and then decided, I met my wife at that time, and decided trying to fix aircraft and be a husband was a little problematic, so I retrained into flying a desk. I did some paperwork on retirements and separations side, did that for quite a while. And then I decided after that I'd work in computers. I did some networking, hardware, software upgrades, and those kind of things, and finished up my rotation on a special duty at the Air Force Academy, working with ROTC students and cadre members to help cadets become officers.
Right on. That I knew there was some connection there. On this podcast, there's 40 years of Air Force experience here. I too am retired Air Force, 20 years and 7 days. Also finished up at the academy, or actually almost finished at the academy. I had to go do about 20 months at Peterson to finish it out.
Gotcha.
Right on. Oh, well, so also today we're going to be talking about VA loans and what those are, what that means, what are some of the ins and outs of them. So what is a VA loan?
Well, a VA loan is a mortgage product that allows most veterans and active duty members to get a home. The structure is very, very friendly for the veterans and active duty members, where we'll be talking a little bit more about that, but there's sometimes no down payment requirement, almost always no down payment requirement. The interest rates are extremely, extremely competitive with other types of products, and very, very good way for individuals to get into homes these days.
Right on. So the market right now is pretty crazy, man. Are VA loans even competitive in a market where we have 1,117 single-family homes in El Paso County for sale?
That's a great question, Rob. I do think that they are in the right hands, and that what I mean by that is this, and you can probably answer this too. Sometimes when an offer comes in and they see that it's a VA loan, sometimes without properly explaining exactly what that does and what that means to the seller and the seller's agent, they might think that it would be harder to close and have more things that need to happen on the appraisal side to be able to get qualified and actually close that loan. I would contend that that is not the case. What I do specifically is I actually underwrite the VA loan beforehand, and I can actually make that particular type of VA loan equivalent to a cash offer, to believe it or not.
Closing in equivalently the same time or approximately the same time kind of thing?
That's correct.
Subject to the appraisal?
That's correct.
Yeah, as a seller's and buyer's agent, when I do these and have VA loans, which is frequently, one of the things I explain to them is VA loans have a bad rap for being extremely stringent, their appraisals, and I'll tell them that's not actually the case. They're in my opinion, no more stringent than an FHA appraisal, and even then, the things they're looked for are chip and peeling paint, holes in the walls, structural issues. So they aren't quite as, quote, liberal as a conventional appraisal, but they are not as strident as they have a reputation for being. And plus, if you're the listing agent on a property, you can head those things off by informing the buyer ahead of time that or the seller rather, that for example, if there's a deck that has exposed wood, that's going to need to be addressed. Maybe not now, but expect that if we get a VA loan, and that will be an appraisal condition most likely.
Yeah, absolutely. And if we're educating our folks and taking care of those things ahead of time, there usually are no issues. And ultimately speaking, what they're trying to do is make sure that the veterans have an amazing home to live in.
protect the veteran, and they're also a VA loan. It is interesting. There's a misconception out there too. Sometimes people think that the VA originates those loans, and that's not the case. The VA is insuring the loan, so they have a financial interest in making sure that the home is structurally sound as well.
That's correct. Yeah, the lender actually, has the underwriting and those kind of things. There are, guidelines that the VA has for sure, but you're exactly correct. They guarantee 25% of that loan amount most of the time, and I can get into the details later, but 25% is backed by the VA, which is why ultimately the interest rates are lower than conventional rates, because the lender feels extremely comfortable that they're going to get at least 25% of their money back, and then they can sell that home if there is a default situation, and they will be made whole again.
Right on. Okay. So we came up with a list of questions before the podcast to talk to. So I'm just going to ask you these questions. We can elaborate as we go. So the VA loan, I think you mentioned it, but has no down payment, generally speaking. Do we need any money to close these loans?
So let's talk about the market currently. That'll be a helpful piece of the puzzle there to be able to answer that question. So the market right now, and you can tell me if I'm correct, Rob, is that on most loans right now, the seller, because it is a seller's market, is not going to help out with closing costs and the establishment of the new escrow account and those types of things. So to answer your question, a lot of times you do need the buyer does need money to close to be able to pay for buyer closing costs, such as the appraisal, title fees, the underwriting fee, if there is one, recording charges with the county, those types of things that are on the buyer's side of the transaction. So the answer is, while there is no down payment, some people think that means that they might not need money, and that usually is not the case.
I agree in this market. And to put some numbers to what Troy's talking about. So, for example, you have a house that's listed at $300,000. There is on average, 100.5% likelihood that home is going to go for at least that price. That's the list price to sell price ratio right now. I don't know if that's statistically correct the way I phrased that, but it's highly likely it's going to go for this price. So let's call it $300,000. There are costs on top of that loan, from loan origination fees to some of the title costs. And so call it, your mortgage might ultimately be on that home $307.5 because of those associated costs. Historically, in this market, we've been able to get what's called seller's concessions, commonly known as closing costs. I like to split the hair and say that no, it's actually seller's concessions towards a buyer's closing costs, because it doesn't cover ever the totality of the actual closing costs. Legally, they can't. So call it $5K. In some cases, in a lot of cases, historically, we've been able to get a couple $1,000s in closing costs. So your $307.5, it becomes $302.5 on the mortgage, and so. There are some circumstances, debt-to-income ratio, things of that nature, where a VA buyer might not have a down payment requirement, but they may need to bring some money to closing.
That is absolutely correct, and per mortgage guidelines, whatever the purchase price is except for financed VA funding fee, and we'll talk about that a little bit later. But the base loan amount can only be the purchase price. So the closing costs and the new escrow requirements have to come from somewhere. And in this market, by and large, they're coming from the buyer.
Right. Yep. Agreed. What to get a little nuanced here, can't I bump my interest rate on a VA loan to cover some of those costs?
Yes, you can. That is entirely possible. What I try to do is educate people, and is that the right move is the question. And so what I do is I look at, okay, how long are you going to be in the home, right? What is the interest rate doing right now, and what do we think it's going to do in the future? So while the answer is yes, that's an easy fix, sometimes what we also want to do is make sure we're putting you in the right situation and the right options for you. A lot of times the answer is, maybe you can get a gift from a relative. That's entirely possible if that's something that they would be willing to do. And if we can keep that interest rate low when the interest rates are climbing and you don't have an opportunity to potentially refinance down the road, and you're going to be in the home 10 years, then we do the numbers together. And I would say, you know what, I would highly recommend, if we have another option of getting that the closing costs covered another way, not through the rate, let's do that instead.
I would agree, because the alternative is you're amortizing call it $3,000. You'd be amortizing those $3,000 into a 30-year, most likely 30-year mortgage, where you're going to pay far more in interest than you would traditionally. So but it is an option, right? But run the numbers. Have Troy run the numbers with you on any given home to find out what the right answer is, the best answer. Okay, so let's talk about down payments. When is a down payment required on? Or actually, let's ask this: should I put a down payment on my home if I don't have to?
That's an excellent question that I think everybody needs to ask. Just because you can doesn't mean you shouldn't. I always say in this industry, because you don't have to put a down payment. If you have the ability, obviously having equity in the home is an amazing feature right when you walk in the door. So if you have the ability to put a down payment down, obviously it's going to drop your monthly payment. It is going to allow you to have equity in the home. So if the market does turn and everything's in a cycle, it will at one point, who knows when, but we've all been there before when we've seen that happen. We don't want to be in a situation where we're underwater. So the other thing is, if you have to pay a VA funding fee, and you will if you do not receive any VA disability, that percentage of the funding fee that would be required is lessened if you put 5 or 10% down. So that's extra money that you do not have to put on top of the loan, which again, amortized over time, compounds and saves you money over the long term. So if you can, I recommend you should.
I would agree. I would also consider the opportunity cost of that money. If it's sitting in a low interest savings account, it might be saving you even more money to use it against your home. And then to your point about the market, there will be a correction at some point. You know, what goes up must come down. I was doing some stats this morning. You probably know this right off the top of your head, but we've had a 10% increase in the average sale price of homes since November. 300,000, 304,000. Now it's up to 334. It's interesting. It's interesting. So you might consider hedging against any downturn in the market. Over the last 4 years, from April 2014 to now, there's been a $100,000 increase in the average sale price of a home here.
Yeah, it's kind of it's a double-edged sword, in my opinion. I think it's extremely good news in some aspects that, you know, homes are appreciating. The job market is very good. The especially in Colorado Springs and the surrounding areas, but we have to make sure we understand that the future is not set, and that's not that curve is not going to continue forever. So,
no, by definition, yep. Okay. When is a down payment required on a VA loan?
So a down payment is required on a couple of different instances. Thanks for asking that, Rob. So let's talk about county loan limits for a second. Okay. So in El Paso County, the county loan limit is $453,100, which means that if you purchase a home for that amount or less, there is no down payment requirement. Now, if you go above that, there is a calculation that can be done, but if you want to buy a $500,000 home, that's absolutely fine. Super quick numbers is purchase price minus the county loan limit, and then you multiply that by 25%. That's going to be how much you have to put down. So on a $500,000 home, you might have to put about, 8 to 10 grand down to be able to fully guarantee, for the VA to fully guarantee that particular home. Now, the other potential way a down payment is required, and I get this question all the time, VA members want co-signers potentially to be able to qualify for a home. And if the co-signer, that is not a veteran, then a down payment is required, and it's 12.5%. And the reason why is the VA says, well, we will guarantee 25% if it's a veteran on the loan. Well, if half of the people on the loan are not veterans, then we're only going to guarantee half, and that other half has to come in the form of down payment on the loan. So that's very important to know when you're looking at the co-signing side of things.
That I did not know, and that's an interesting data point. Thanks for that answer. Okay, so I've already purchased a home with a VA. Can I do it again?
You absolutely can. So in most instances, so the answer is, let's do the math and figure it out. So again, if the county loan limit is $453,100 at the time, and you bought a $200,000 home in Texas, for instance, and you're going to be PCSing up here or moving up here, or you already have and you've been renting, but you have a rental property down there, let's say, and you've kept it on a VA loan. So the quick answer is yes, you can, but you have to do a calculation. Easy math says that if you bought a $200,000 home, and let's just say you want to buy a $450,000 home, right? you have $250,000 left in entitlement from the VA. So if you wanted to buy a $250,000 home, you still have that much equity. You can actually carry 2 homes on one entitlement, one certificate of eligibility. So it is entirely possible. If you wanted to go above that, again, down payment is potentially required. I'm doing a loan right now where the wife and the husband both have VA entitlement, and they do have rental properties. This will be their 3rd home. So what I did actually is I ran the numbers, and for lack of a better term, I glued part of one entitlement for one individual and the other remaining entitlement from the other, and was able to put enough in there to be able to actually use the remaining both portions of their entitlement to get that done for them. So
that's pretty awesome. That's creative thinking.
Well, we got to do what we can for them, right?
We do. So there is an interesting. Let me add on to that question. I've already purchased a home with a VA loan. Can I do it again in the same town?
In the same town, the answer is you could potentially, and so we've actually done that before, believe it or not, in the same neighborhood. So it really depends upon how long you've owned it.
Okay. Is
the biggest thing, and a lot of times you have to get VA prior approval as to the reason why. Are you upsizing? Are you downsizing? Was there some event that caused you to not be able to have a home that fits for you? So it's not a hard and fast rule. It's not 100%. Yes, you can. We need to do our due diligence on it, but you can absolutely do that if the parameters are correct.
Yeah, that's something a lot of people don't know. But yeah, I did have one couple that bought a home. They sold a home here, went and bought a home in another location. They called 2 weeks later after the closing of that house, and they had a neighbor that was harassing them actually, and like systematic harassment to the point after the closing that they called the police a couple times within 2 weeks, and I advised them to call the VA, and the VA actually approved them selling that home inside a month, and in this case they made it work where they ended up taking a bit of a loss, but I was real surprised that the VA approved it for that reason. But yeah, they allowed them to buy another home. Yeah,
I mean, technically speaking, you're signing a security instrument when you close on a home that says this is going to be your primary residence for a year. However, in that instance and in others that I've seen in the past, like we described before, if it's within that year, there's potential where the VA understands, and they want to see the human side of things and understand the reason why, that they're not just trying to churn on a VA loan and get a bunch of rental properties. That's really what they're trying to avoid.
Right. And what he means by that is with the VA loan allows military members or retirees or qualifying individuals to buy a home. It could be used. What's the word? It could be used in, I don't want to say a negative way, but it could be manipulated where, if without that provision, where a military member could then buy investment properties for no money down, and that's not the goal of the program. It's to get them into owner-occupied properties.
Absolutely, that's correct.
Yeah. Okay, what are some of the costs associated with a VA loan?
Yeah, I hit on a few of them. So I think the biggest one that we need to talk about is the VA funding fee. So if you're active duty member, obviously you will not be getting any VA disability. So if you're active duty and listening to this podcast, if it's your first time using it and you're not putting a down payment down, it's 2.15% of the loan amount to be able to, that the VA uses. And that funding fee, basically what it does, that's that pot of money that the VA uses just in case people default to be able to pay that guarantee. So that's the reason for that VA funding fee primarily. So that's a big portion. So on a $300,000 home, you're talking over $6,000 that is tacked on to your loan. I would still say that it's an advantage most of the time to do that with the VA funding fee. However, if you put some down, up to 10%, that can go down as low as 1.5%, 1.25% potentially, where again, that funding fee lessens, which means that the cost of doing the loan goes down and that annual percentage rate goes down. So the VA funding fee is one of the costs that we're looking at. There is an appraisal. The VA per state and per county really determines how much the appraisal will be. The appraiser has nothing to do with it, to be honest with you. It is $750 for a normal single-family residence home on an appraisal. I will say this, shameless plug, I pay for the appraisal for veterans.
That was going to be my next question.
So I would be happy and honored to make sure that we keep those closing costs low for you and take care of that appraisal for you. So, and some other costs are the potential underwriting fee. We don't charge any. The only thing that the lender, myself, is in charge of as far as fees would be the underwriting fee, and we charge $9.95. And what that covers is we got to pay the underwriter. It covers the credit report fee, any small tax service fees, flood certs. We kind of put it all into one, so we're not inundating people with a bunch of small little fees. We just make it really simple. And then another fee that could potentially be involved, and again, it's depending upon the structure of the loan, is origination charges and discount points. So origination charges are basically a charge that the lender charges to do the loan. Here at Integrity First Financial on the Reichert Mortgage Team, we don't charge any of that. And then discount points is basically buying down the rate. Okay, discount points is a charge to make the rate lower. And that's really something that either we need to do to get the guidelines correct from a debt-to-income perspective, or because the individual wants to and they understand the cost of it and it makes sense. So we go through those numbers. The other things that we can look at are title fees. So lender's title insurance. There is a closing and escrow fee, sometimes what's called a closing protection letter. There's a lot of fees depending upon which title company is being used, and normally they add up to somewhere in the neighborhood of $1,500, $1,750. So, but each title company is the one that's responsible for figuring out what fees they want to charge.
I'm just going to make a shameless plug here for you, or on your behalf. He's doing this all off the cuff. You can't see this, but this is how detail-oriented this guy is. He's got all this knowledge in his head. Just share that.
Well, I'm really passionate about helping everybody, don't get me wrong, but especially veterans, just because, that was the world I came from. Sometimes they don't get a fair shake out there, and I know the language. I've been in that. And I'm really excited actually to be here, and the fact that you even asked me to be here is amazing. So I appreciate you saying that. Some other fees, they're smaller fees, but you can look at recording charges. So it costs some money. The county charges to record the new document saying you own the home. That's usually somewhere in the neighborhood of $125 to $175, somewhere in that range. Long story short. The closing costs, and again, shameless plug alert, here at Integrity First Financial, what we do is, at first we disclose all the fees, but once we get to the end of the transaction, we get that closing disclosure to you. If we see that those fees are going to be more than $2,995, we give a lender credit at no interest rate change. We give a credit to make sure that those fees are no more than $2,995 for you.
Right on. All right. So can I get a cosigner to qualify on a VA loan?
You can. The cosigner can help out with the income side of things. So let's say, for instance, you want to afford a home because you just adopted some children, or you have some new family members coming into town, and you need a bigger home than what you have right now. But you know that you're going to get your time and service promotion in a year, and you'll feel comfortable to be able to do that, but you don't quite fit the parameters of being able to qualify income-wise. We can go ahead and have someone come alongside you and co-sign for that loan. Now, if it's another veteran, that is advantageous, because then we don't have to worry about that down payment that we talked about at the 12.5%. Right. But if it's a non-veteran, then that 12.5% down payment requirement would come into play.
Okay. No. And we already hit on this one too. But how can I make my offer equal to or better than a conventional loan offer?
Yeah. So, and I'm going to elaborate a little bit more on that. So what I do on these, and almost every loan at this point, because I really want to help everybody out, but specifically on the VA loan, is I underwrite without a property. And so the income, the employment, the assets, the credit, has already been in front of and been signed off by an underwriter while and before you go looking for homes. Okay, so while you're looking for homes, you can still put offers on homes with a pre-approval letter. That's not a problem at all. However, if you already have it underwritten, what I do personally is, when Rob and I are working with somebody and he calls me and says, hey, we're looking to put an offer in on this home, 1313 Mockingbird Lane. Look it up on Google. You'll see whose house that is. But if we want to put an offer on this home, I say, hey, Rob, who's the listing agent on that home? After you put the offer in, let me know, and I will call that listing agent, and I will explain to them in detail, hey, ma'am, sir, Rob just sent an offer over on 1313 Mockingbird Lane for the Smiths, and I wanted to explain a couple things here. Not only are we pre-approved, we are actually physically underwritten, which means all I need is an appraisal, I need the contract, and I need some title work. Mr. or Mrs. Agent, would you like to close in 21 to 28 days? And so what I'm doing there is I'm really putting them, the buyers, in a very, very solid and advantageous position to get their offer accepted.
And that stuff matters. This matters in a competitive market. Okay, last question. I'm about to separate or retire. Can I use my VA entitlement?
Maybe. So I get a lot of these questions too, and really what it boils down to is, when is your separation date? Okay? So if you gave me a call and we talked about things, and I'm pretty thorough, so we spent some time on the phone together or in person. I love that as well. I think it's really important to shake hands with people and be able to get a lot of good information. So you call me, we're sitting down at a Starbucks, and we're talking about getting you pre-qualified. And you show me your LES, because you're active duty, and I look at your ETS, or your time of separation, and it's within a year. The answer is, we can't qualify you on the active duty income, because the underwriter is going to see that you're getting out in a year. And ultimately, your income and employment has to be two things. It has to be stable, and it has to be reliable. And that kind of kicks that out of those parameters. So let's say you just separated. What you have to do then is, the VA requires that you be salaried or hourly position, something stable, but in the line of work that you were doing previous in the military. They want to make sure that you're going to be in that job for a good period of time. If you were, let's say, aircraft maintenance, and then all of a sudden you were going to be salaried but in a sales position, those would not correlate, and we wouldn't be able to use that as qualifying income.
As I was closing in on my final stretch, I was buying another property, and that came into play for me because I was dual hatting it as an agent already, but I had the self-employment income, but also the active duty income, but I couldn't, I had to close by date X, because if I wanted to include the active duty income, and it was problematic, but it worked out.
Well, I'm glad it worked out, and we need to make sure that we have all those pieces together to have a really solid game plan for the entire team to make sure that it goes well for you.
Well, any advice to folks looking to buy in this market right now?
Yeah, I think people have heard this before, but I can't stress it enough. If you're looking to buy 6 months, a year and a half from now, really now is the time to talk about getting pre-qualified, and there's a few reasons for that. One is, it allows someone like myself, an expert, to be able to analyze credit, analyze that income, the employment, to make sure you're going to be ready. And when I say ready, not just able to, but be in the best position to purchase a home at the right time. So, for instance, if we had a 650 credit score, but you're looking 6 months out, I do free credit counseling. I know I'm certified in credit counseling, and what I do is I analyze it. We come up with a game plan, and that way, if we needed 3 months to get your score up to a 720, what that does for you is it gets you a better interest rate, more buying power for when the time comes, so you can feel really confident when you're putting those offers in.
And in this market, you really need to be able to strike fast when you're ready. So get ready, and then you can wait until you find the right property and grab it. There's just not a lot. This is not a market anymore where you can look at a home and take 2 or 3 days to go through a process. You should always be pre-qualified before you go in a house, or pre-approved and underwritten is even better. But where I'm going with this is, if you find a home in this market, particularly $300,000 and below, it's going to be gone if there's any delay in you getting your best foot forward on the financing side.
Yeah, and you need to really, really have all your ducks in a row. Let's talk about pre-qualification just for a second. I really don't do pre-qualification letters. I have on a very rare occasion, very small circumstances. But what I always do is when I talk to somebody or meet with somebody, I give them a list of homework items to prove what we talked about. I analyze them, and again, usually underwrite them in this market. And that way, unless there's something changed between the underwrite and some life event, if someone unfortunately were to lose their job or something like that, then obviously those things change. But he's exactly correct. Rob is when he says you need to strike extremely quickly, and having that confidence that, hey, nothing has changed since I've been underwritten. I can go ahead and do this. That's a really, really good feeling. Makes the experience go very well.
One note, just to distinguish pre-qualification, pre-approval, what I usually say to folks is pre-qualification is the lender is taking you at your stated word and saying, yeah, according to what you've told me, you're qualified to buy a home. Pre-approval is you've provided supporting documentation that can go to the underwriter to validate that, and it isn't that people are being dishonest or anything. It's sometimes stuff pops up that they don't even know about.
Yeah, I can give you an example of that. So, for instance, active duty member says that they're an E7, been in 14 plus years. I can just look up the military pay chart and figure out their income. However, when they give me the LES, there's an allotment that shows up on the deduction side, and so I have to ask that question. Again, they didn't think twice about it, but if you unearth those things at the very, very beginning of the process, you can work through that and get it squared away a lot quicker, and then the home buying experience is so smooth at that point.
Right on. Well, thank you for your time today, Troy. That was the most comprehensive rundown on a VA loan I think I've ever had, so thank you.
No, I appreciate it so much. I have a lot more of information. If we can schedule something later on down the road, whatever you need, I am absolutely available to you, and I am ready to do that and help as whoever I can.
Well, I think we're going to make this a weekly recurring thing, right?
Let's absolutely do that. Absolutely.
So I usually close these out with a request for any books or websites you recommend. Anything you're reading right now you'd share?
Yeah, absolutely. So I love the business side of things. I'm kind of weird that way. I like to understand why things work and why they don't. I think ultimately the reason why people work with other people is because they know, like, and trust them, right? They feel comfortable with them. They have a commonality, whether it be a veteran or an active duty member. I think that's important in some aspects. But ultimately, you, me, the people on the team need to have the best interest at heart. And one of the things that I think was really cool that I'm reading right now is it's kind of a funny name. It's called Mr. Schmooze. It's the art and science of selling through relationships. And I'm really reading that not because of the dollar behind it, but it's really about creating and understanding the relationship aspect of things. So if you're an individual out there, entrepreneur, own your own business, or anybody out there that just is really interested in how that works and why we do what we do, Mr. Schmooze by Richard Abraham is a great recommendation that I have.
Right on. I'm reading Adaptive Markets and have been for a little while because it gets into some math. But by Andrew Lowe, and one of the things that he talks about that I just find fascinating is the efficient market hypothesis, and how the price of a thing, and from stocks to houses, perfectly prices in all available information in the market at that moment. And so in relation to housing prices now, the wisdom of the markets is saying that the average sales price of a house is $334, despite maybe some personal misgivings that I have about the market rising that fast. It's pricing in. So it sounds simple, but it's actually quite complex when you pull back a layer of it. And anyway. So,
I don't pull back layers like Rob does. That I think that's a little headier for me than it is for him. But I appreciate the thought process behind it, and just a piece of example of what he's talking about. Interest rates, for instance. A lot of times, when the Fed meets quarterly or whatever, everybody's wondering, okay, what are they going to say? Well, a lot of times the whispers and the market has already factored in any change, positive or negative, before the Fed even meets to discuss what they're going to do about, buying or selling mortgage-backed securities. I don't want to get into detail. I know that's kind of boring stuff, but a lot of times those meetings are almost, they don't change the market because they've already corrected beforehand.
Exactly a great example. The Fed's going to meet, but their language has already been parsed and priced in by the market, and so it's fascinating to see the dynamic, to me at least, at play behind that hypothesis. But I'll stop there. So Troy, somebody wants to buy a home, how do they call you, or how do they get in touch with you?
Yeah, there's a few different ways. Again, I really enjoy the face-to-face. My personal cell phone is 719-205-0413. That's how I do business. Again, 719-205-0413. You're going to get me, and then we can either right away or schedule a 15 to 20 minute telephone or face-to-face meeting to work through getting pre-approved for a home. I also do have a website where you can get pre-approved. It's www.reichertmortgage.com. I can spell that for you. That's REICHERT, and then the word mortgage.com. There is an online application. Online applications have their place, but I would prefer to talk to you. So give me a call, again, 719-205-0413.
I'll just make one more plug. This guy, if you were here in person, you'd see the detail-oriented nature of him and the intensity with which he approaches this topic. I highly recommend him.
Thank you so much, Rob. I appreciate it.
Talk to you later, and we'll see you next Monday.
All right. Take care.
Or Tuesday.